You're measuring success wrong because you're looking at P&L to determine whether trading is working. And P&L in small samples tells you almost nothing because it combines two signals, your edge plus variance, and in samples under 100 trades, variance dominates so completely that P&L is mostly noise. The only metric that actually predicts long-term success is execution rate, percentage of trades that perfectly matched your plan, because execution rate measures what you control, while P&L measures what you control plus what you don't, and only controllable metrics predict sustainable outcomes. The uncomfortable truth: you can have 100% execution rate and lose money for 50 trades due to variance, and that's success, not failure, because you're executing perfectly. And when variance normalizes, your perfect execution produces returns your edge promises. Conversely, 40% execution rate making money for 50 trades, because variance gifted wins, despite poor execution, is failure not success, because you're building no foundation, relying on luck. And when variance normalizes, poor execution produces losses, lack of process guarantees. The trader who executes at 90% and loses for 8 weeks is more successful than trader who executes at 40% and wins for 8 weeks, because only one is building foundation while other is accumulating luck. And if you measure by P&L, you'll conclude the wrong trader is winning. This is why P&L deceives in small samples. 60% win rate edge produces negative P&L roughly 30% of time over 50 trade samples, meaning you could execute perfectly and still show red for weeks. And if you measure by P&L, you'll abandon working edge during normal variance window. The daily execution score replaces P&L as primary success metric. After each trading day, ask what percentage of my trades today matched my plan exactly, and score honestly, not mostly followed plan. But every entry met criteria, every exit followed rules, every size matched plan, yes or no per trade. Then calculate percentage. 80% or higher execution rate means you're succeeding regardless of P&L because you're building systematic foundation that produces long-term returns, and P&L will follow once sample size allows edge to overcome variance. 60 to 80% means danger zone, executing well enough to feel systematic, but inconsistently enough that variance masks whether edge is real, and you need to identify which rules you're breaking before inconsistency compounds into habit. Below 60% means you're failing regardless of P&L because you're not executing any edge, trading randomly with system veneer. And any positive P&L is variance gift, while negative P&L is natural consequence of non-systematic trading. Track execution rate weekly. Add up all trades. Count how many matched plan exactly. Calculate percentage. Plot trend over time because execution rate trending upward, while P&L flat means building foundation. While execution rate trending downward, while P&L positive means accumulating debt variance will collect. The psychological shift. When you measure success by execution rate instead of P&L, you stop experiencing losing days as failures and start experiencing them as data points. And a day where you executed perfectly but lost money becomes evidence of process strength, not system weakness. This eliminates emotional volatility because P&L fluctuates wildly in small samples, creating emotional whiplash, while execution rate fluctuates based only on your behavior, creating stable feedback. And stable feedback produces sustainable improvement, while volatile feedback produces erratic adjustment. Common resistance. But I need to make money, so P&L has to matter. P&L matters over sufficient sample size, but P&L is unreadable in small samples, while execution rate is readable daily, so measure what's measurable now and trust high execution produces positive P&L over time. Your implementation. Create simple daily log with one question. What percentage of my trades today matched my plan exactly? Answer it honestly every trading day, track weekly average, and use execution rate, not P&L, to evaluate success, because execution rate tells truth about process, while P&L tells truth about variance plus process combined. The only metric predicting long-term success is execution rate, because it measures what you control, provides readable feedback in small samples, and compounds into edge realization, while P&L measures controlled plus uncontrolled, provides noisy feedback, and misleads about whether you're building sustainable foundation or accumulating reversible luck.